In recent times, gold prices are seeing a one way journey up without turning back. The new year 2026 has brought with itself another new record high for gold. Currently, the yellow metal is close to 5,000 US dollar per ounce in the global markets. 1 ounce is approximately 28 grams. That is 28 grams of gold costs around 4,50,000 Indian rupees. In Indian markets, 24 karat gold is marching swiftly towards 1 lakh rupees for 10 grams. In India, our eyes are always fixed on gold rates for weddings, savings, tradition, and everything revolves around gold. But while we are busy tracking gold's every move, silver has been quietly climbing the ladder in the background. Hi, hello, vanakkam, namaskar. Welcome to POV World from Bharat YouTube channel, World through Bharat's lens. Silver. Silver is often called poor man's gold, but in reality, it plays a much bigger role in the global economy than most people realize. Unlike gold, which is mainly used for savings and hedgings, silver sits at the intersection of money and industry. That makes silver a quiet but powerful indicator of how world economy is moving now. In January 2026, silver prices have touched a $100 mark. Last year, that is in 2025, while gold prices rose around 65%, it was silver that rose more than 150%. That is more than double the price increase of gold. Meaning, if you had invested a 1 lakh rupee at the start of 2025, you would have received rupees 2,50,000 by the end of 2025. Now, we are not even a month into 2026, but silver prices in India have jumped by 1 lakh rupees per kilogram since the beginning of the year 2026. Silver prices in India stood at 2,38,000 rupees per kilogram on 1st January 2026, and the silver rate was recorded at 3,34,000 rupees per kilogram on 26th January. Now it's time to look at the factors driving these silver prices. Number one, industrial growth. Firstly, silver is deeply linked to global industrial growth. Apart from an investment tool and a jewelry metal, it is a key material in products ranging from solar panels and electrical vehicles to smartphones, medical equipment, and batteries. Even the rapidly increasing AI data centers also require substantial amounts of silver for high performance computing components due to its superior electrical conductivity and thermal management properties. Today, as countries push for renewable energy and electrification, silver demand rises automatically. The second factor is demand and supply. Silver demand is exploding, but the world cannot produce enough to match the demand. The problem starts with how silver is mined. Most of the silver do not come from only from mines. It comes as a bonus metal while mining copper, zinc or gold. So, even if silver prices rise, mining companies cannot increase output easily unless those other metals are also mined more. This in turn slows down the supply growth of silver. In late December 2025, Elon Musk, the world's richest person and the CEO of Tesla, expressed significant concern over a severe global supply shortage of silver, calling it not good due to its critical, irreplaceable role in manufacturing solar panels, electrical vehicles, and electronics. When silver supply is tight, solar panel costs go up, EV and electronics become more expensive, and clean energy projects slow down, which means higher prices for gadgets, costlier vehicles, expensive power infrastructure. This adds to the global inflation, making life costlier across economies. When it comes to silver supply shortage, China remains a key factor. China is the third largest producer of silver after Mexico and Peru. China produces an estimated 3,500 tons of silver, which accounts for 12% of the global production of silver. Silver is rarely found pure. It is typically refined from copper, gold, lead, or zinc concentrates, and China dominates this refining industry. Although China accounts for only approximately 13% of globally mined silver, it dominates 60 to 70% of global silver refining, giving China oversized influence over the supply chains. From January 1st, 2026, China has tightened its silver export controls and has placed the silver under an approval based export licensing regime. This move from China also contributes largely to the supply shortage of silver. The third factor for the silver price hike is US dollar weakening. The Fed, which is the Central Bank of America, has continued its three interest rate cuts into 2025 in order to ease their inflation. When the US Federal Reserve cuts interest rates, fixed deposits and bonds give lower returns. This makes investors to shift their money from cash and bonds to gold and silver for higher returns, thus increasing the price of silver. Also, silver is priced in US dollars globally. Currently, the US dollar is weakening against the major currencies of the world. This too contributes to the increase in the demand for silver. Fourth factor on the list is the global uncertainty. Silver isn't just a metal for jewelry or industry, it is also seen as a safe place to park money during times of global stress. When major world events create uncertainty, investors buy silver just as they buy gold, pushing the silver price up. Recent geopolitical tensions like the Ukraine war, the Venezuelan oil crisis, and the Iran conflict also are boosting demand for safe assets like silver. And finally, we have investor confidence. When gold prices rise sharply, it usually means investors are scared. They fear inflation, war, recession, or even a currency collapse. So the investors want to protect their wealth and not grow it. Investors' mantra during such times being high gold prices equal to play it safe and protect the capital. But unlike gold, the silver rises for two reasons: fear and growth. In today's world, the future is uncertain, but industries and green energy sector will still grow. Now, investors say high silver prices equals we are worried, but growth will continue. Bottom line, gold shows fear, oil shows power, silver shows whether the world's missions are running smoothly or not. Gold rates are soaring, investors are nervous. If the silver rate is soaring, investors are nervous, but they believe that the world will move forward. The next question is the silver rally sustainable? Though silver has rallied much faster than gold, prices have risen faster than real demand due to speculation and fear. Also, when solar and electronic industries reduce their silver usage and find cheaper alternatives like copper, demand for silver reduces automatically. When factories slow down, silver feels the impact faster than gold. In addition, when global uncertainty cools down, investors may shift away from safe assets like silver. Then the correction of silver prices may be much steeper than that of gold. India is the third largest solar power producer globally with over 116 gigawatts installed and is moving towards a target of 280 gigawatts by 2030. Each solar panel uses silver for conductivity, and high silver prices are hurting the industry in a big way, with a 3 to 15% increase in the cost of end products. For India, high silver prices means costlier imports as we import most of our silver. To overcome rising silver prices, India's solar sector is working on reducing silver usage per panel and adopting copper based alternatives and also improving recycling of old solar modules. Strengthening domestic manufacturing under Make in India and PLI schemes will help cut import dependence and control costs.